I'd say there's one massive mistake a lot of first time real estate investors do, and that's they don't get their finances organized. I mean, it boils down to that really. I, for example, I wasn't even aware I needed to have my finances organized. What does that mean? So, I'm collecting my rent, I'm paying my mortgage, I'm paying my insurance, I'm paying all these things. The cash flow is there. That's not a problem. The cash is moving in and out. But when I want to figure out how am I performing? Can I start affording my next investment property? Am I paying myself? Do I have enough to cover for my taxes end of the year? That's what I mean by the financials. So if you don't have a good system, and if you're like me, for example, I don't come from a CPA background. I don't understand the ins and outs of finances at all. I barely know what income and expenses are. And probably Sad will probably tell me I get them wrong half the time, which is fair. I'm a guy who knows software, but I still want to work in real estate investments. So how do I build that tool set? Either I need to go out and hire a really expensive, CPA like Saad to come and help me build that, or I need to be able to use a tool. And that's what the biggest mistake we see. People don't build, or investors in general don't build great financial habits from day zero. Like you said, one investment property, very easy to collect my cash with Venmo, with Zelle, with PayPal, with a check, with a direct deposit. Now comes tax time. Where's all my expenses? Where are all the receipts? They're not going to be in a shoebox because that's going to be a nightmare to untangle for even one property. Now try to, like Saad is saying, one property is not going to help you reach your investment goals. Scale that up to 5. And it's not you're multiplying your problem by 5. It's more like you're multiplying it by 50 at that point. That shoebox of receipt explodes. The number of rental that's coming in, like someone in your case, you have you're renting out by room. You're multiplying everything. You're multiplying your rent income by 5. You're multiplying your expenses by 5. You're multiplying your insurance payments by 5, your mortgage by 5. So all of these add up and they just eat up into your time. So that's the biggest mistake we see. Most real estate investors, especially starting out, do not build that good financial system. They don't build the good financial habits that can scale. You want something that as you add another property, you're not multiplying your effort by 5. You want something where you're just adding another 5 minutes of your day on the finances, because the last thing I want to do is the finances. What I want to do, what excites me is being a great landlord. What excites me is going and hunting for that next deal, just trying to see how I can add to my portfolio. That's the exciting stuff for me. Doing the finances, not exciting, not at all. But you cannot become a great investor. You cannot become a great landlord if your finances are the foundation of everything is not built properly.
Yeah, and I
So
think
true.
and I think there's another sort of like mistake I see people making. And in the sort of digital economy where we're on forums and we're all like collaborating online, there are some dangers to that too. And I also lead our content team, I lead our influencer team, I lead all the sort of ambassador program and all this stuff. So I see this stuff happening, literally reading comments. It's like a new investor will come on to like a bigger pockets and say, "Hey, I've got this thing. I'm a little scared. I just bought it. I need to find a tenant. Like, what should I do? What are all the things I need to do?" But then they might be getting advice from like people that are not the right people. This is unrelated necessarily to base lane, but it's like, don't get advice from people who are doing the things that you shouldn't be doing. And one of the things that might be manifesting the way to find out why, whether somebody's good or not for advice taking is probably who they are and how successful they are, right? Like, what's your NOI? Then I'll take some advice from you, right? Net operating income. Because I'll give you an example. This happened a few weeks ago and it was super frustrating for me. It's like a newbie comes on Bigger Pockets, asks on a forum how to collect rent. And several people are like, "Oh yeah, just use Venmo, Zelle, whatever. It's just one property. Like, just use Zelle." And I really hate that. And I don't use the H word lightly because I think we are hurting each other if we give this kind of advice, if we build the wrong behaviors. That person did not get into rental property investing to have one property. That's like, is an 80-90% chance that's true. They're trying to get to 10. Nobody's going to get to 5K of passive income with one property, especially when the average net earning per door is $300 to $400 a month, right? So when people take that kind of advice and they do those bad behaviors like setting up Zelle for cash for rent collection, they don't realize what they're getting into. They're going to be in eviction trouble if something bad happens. They're going to be in a reconciliation nightmare if they're a few payments behind and then there's no late fees being charged, right? Just all the wrong things are happening. This is one example. Many people I meet, and not to say like I won't say it's a terrible thing, but like never set up a separate bank account, right? Like, okay, you don't have an LLC, you're not sure if you want an LLC, you have to debate that. You want to save money on the lower interest loans, with the regular, conventional stuff. Okay, no problem. Figure that out later. That's a protection issue. That's a legal issue. But you can still open a business checking account on your name. You don't have to have an LLC. And so there is zero excuse not to do this, right? Like, especially with technology like Baselane, it takes like less than 4 minutes to open a digital business checking account. And you've done it, right? Like,
Oh
instead of
yeah, I've
going,
opened multiple. I'm like, why do I have so many? I don't need this many, but it's just so easy to do.
right. And exactly. And so this is the thing, like we built product that's basic and easy, the easy button, because we don't want you to make this mistake. Maybe you were busy and you couldn't figure it out and you just went with your Bank of America or whatever. Your personal is now commingled with your business. And at the end of the year, your accountant doesn't like you because it's a nightmare, right? And then you just get stuck in that cycle for 3, 4 years, and then you're like, oh my gosh, like I don't know what's going on, and you burn out and you fail, right? We don't want that. This is an example of what can happen. You don't have a bookkeeping system. Another mistake. Oh, it's one property. It's two properties. I know my numbers. Like we did a survey, and almost 70% of people did not know actually how much money they were making. And that was a survey, so maybe people are overconfident. They actually overstated that number. So it's probably much lower. But when we asked them, like, do you feel like you're profitable? Everybody was like, yes. And so that's another mistake. You don't know your numbers. Like you're trying to run a business. Our recommendation is to run it like a pro. It's not just related to finances and baseline. It's everything that you do, whether it's underwriting and finding tenants and property management and all of these things. And that's another example, right? Like where you didn't set up the right bookkeeping system, or you set up QuickBooks, you don't know how to use it, so you never used it and you just wasted money and time. But you still don't actually understand how you're performing. You don't run your monthly P&Ls like a professional, so you see how much net you're earning, where the issues are, right? So you can solve them. A lot of people just end up waiting till tax time to see what happened, and then they're like, oh my gosh, like I actually lost money. Or wait a minute, this property was, the water bill was $300 a month every month. How come I didn't catch that? So that's another mistake. So kind of like summarizing what we just said is like mixing personal with business. That's a big problem. And with Baseline, it's super easy. We'll talk about that. Taking advice, I think, from the wrong sources. Like I would take advice from people that have scaled with the right systems. And I'm not just talking about Baseline. I'm just talking about in general. Again, like building the right habits. And so don't dismiss it. If you're in the game to scale and grow, don't dismiss the behavior comment, right? Take it seriously and run your business like a pro. You're competing on single family rentals with Wall Street. Do you think Wall Street is, using Excel sheets and Zelle? No. And so that's the challenge. We need to level up. And if we're all going to grow and scale to 50 doors, that's probably all what we all want, 30, 50 doors at least, then we need to, establish the right systems and behavior. So that's like our kind of like view of the world based on all the things that we see on a day-to-day basis.